Welcome back to another daily update video. Today was a really green day in the markets, and that's fantastic. And I gotta say, I've been calling this the everything rally for a reason, because things are going up, but it is just a corrective bounce, and it's important to remember that at any moment it could just stop, fizzle, die, and the markets could crash again. But is that what's gonna happen? I don't know. Let's have a look at the charts and we'll talk about it. So I have SPY, IWM, VIX, and AMC pulled up. SPY making a big day today, closing above the last 3 days, which is important because the price has been in consolidation. You can see that the RSI here is at a similar high from 4 days ago, or 3 days ago, 4 trading sessions ago. And so that makes me nervous because while we do have a higher high in the price, the RSI is not setting a higher high. So that's not great. Not great. Potential red flag there. This means that if tomorrow is a red day and the RSI does head south, we're looking at bearish divergence on SPY. And that doesn't mean that the rally is over. It just means that retracement is most likely, some sideways action. You know, you got to get the speculators every now and then. You got to trap all those out of the money call options, and you just got to wreck those positions because that's where the money is for the market maker, right? So people get optimistic, speculators come in, start spending money, buying out of the money calls, and boom, that's what happens. So IWM did a similar thing. We have a new high, but unlike SPY, we do have the RSI coming a little higher. It's almost at that overbought level 70. I want to see it go into overbought. Now, it's called overbought, and maybe people think that price likely turns at 70. That's not the case. This is an expression of averages. If there is going to be a failure of a rally, it occurs more likely at that level. But that doesn't mean that when you get to that level that you should say it's most likely that a downturn is going to occur. You need to wait for the price to move the RSI because all indicators are an expression of price action. Price moves RSI. RSI does not move price. When we speculate using the RSI, it's very important to understand that. And the RSI is actually my favorite indicator. I'm going to talk about AMC and the RSI a little bit when I get into the bigger chart. Now, VIX reached the top of a channel and plummeted, and this is something that I also was looking for, and sure enough, there you have it. So big plummet, greens on the broad markets, AMC, big green day, and the everything rally was supposed to bring the price of AMC up, but there is a problem here. There is a problem. Houston, we have a problem. So let's go ahead and open up the bigger charts. I'm going to start with American Eagle Outfitters. I know this is not what people are here for. They want AMC mostly, but this is a vlog about me, and I am trading American Eagle Outfitters. You can all crowd yourselves in AMC and get wrecked. I'm going to be buying and trading American Eagle Outfitters for a while. I'm really excited about this company for a lot of reasons. I go with them for all the time. You can go watch my older videos. Okay, so here we go. Where are we at? We actually had a drop in the implied volatility, which I don't like. Volume was pretty low, below the 30-period average. RSI did increase, of course, but only being at 53, it doesn't really say bullish momentum to me yet. And we are at the very tippy top of this falling wedge. So I want a high volume event to break out this falling wedge. Bulkowski does have a study, and he establishes that some patterns actually perform better post breakout depending on whether they have high volume or low volume. And he uses that 30-period average to make that determination. And that's why I have this yellow line on my volume chart, and that's the 30-period average right there. So what I'm looking for tomorrow is another big push higher. I currently show a zigzag, a 1, 2, 3, or an ABC move, a measured move up in Bulkowski chart pattern analysis, and this corrective bounce would take us up to about $13. So that's why I'm targeting 13 for the end of the week. And then I think that it's possible we could even see 18 if we do get something of a little short squeeze and some of these positions just start closing. The Bank of America did send the price tumbling with an analyst report, and since here, I have seen some short interest decline. And we had another recent downgrade yesterday, and their price target was 13, so it was still saying that AEO was undervalued. They put a price target at 13. So anyway, here's the thing. I think that American Eagle Outfitters has been oversold, and it's possible that the RSI is actually a pretty poor indicator because look at how long the price has been grinding sideways. It's going to be really hard to make a dent in there because the RSI is a game of averages. So the closer your closing prices are, then the more stable and harder it gets to move the RSI. So the RSI is coming just a little bit. What this also means is that the rally that follows this could be huge. And that's what I'm here for. I like American Eagle Outfitters on fundamental principles, and I acknowledge the short interest, but I am not counting on it. I did do some trading today on American Eagle Outfitters as well. Let me pull up AEO here. I want to talk about my position, and I'll zoom in a little bit here, put something up there. Let's look at the 1 minute. It was a good day today. Yeah, that was a good day. Great day today. A little nerve-wracking at first. We did find double bottom below uptrending support, which is pretty common. Those patterns do form below. A bottoming pattern typically forms below a horizontal level support resistance or an uptrend. Volume was kind of low. I did like this jump in implied volatility, but I mean, that's after it plummeted. So, you know, I see this, and it doesn't necessarily look like a falling wedge to me. There is a channel through here, but the price kind of stayed in that lower half. It made me a little nervous, to be honest. So I rolled some calls last week after that big drop because of the Bank of America report. And it was a good call. And at that time, I told myself, if you can make any money on these positions, you need to take those profits and just be grateful to get that. Don't be greedy. And so today, that's what I did. I took profits and some marginal losses. I closed $12 calls, $12.50 calls that expire today. I'm holding on to the $13 calls. Oh, they don't expire today. They expire at this Friday. I held on to the $13 strike calls that expire this Friday because they're pretty speculative and they were cheap. So the cost of these contracts fit within the profits that I took. And I also closed the short put that I sold for a profit as well. So I made $34 there. I mean, just right there, it's like, oh, look, you made $34 on this contract, and these two that you bought cost $8. So there you go. They're essentially risk-free to me. I just take the value of the contract and just subtract it from my profits and say, great, there you go. So I'll ride or die these $13 calls. If the price does move much higher, then I will collect some premium, some sweet gains on those calls. And when I did close that put, I actually had a bunch of cash because this was a covered put. I sold it short, but I had the cash to cover the contract in case whoever bought the contract wanted to exercise it and make me buy their shares, because you buy a put, you have the right to sell. And since I wrote the contract, that means they're selling to me, which means I have to have the cash. So I did. And when I closed that, I had the cash. I said, you know what? If $12.50 is where I'm willing to buy American Eagle Outfitters, because that is where I'm willing to buy it, and the price is below there, then I should just buy the shares. So I did. I bought 100 shares at $12.24. And what this does is it lets me hold and not worry about time. There is no theta on shares. There are on contracts. You could be buying calls the week before a short squeeze and all your contracts expire worthless and you're out on your ass. And then the next week the price explodes into like you positioned bullishly, but you did it so poorly you missed the entire rally, right? So I don't want that to happen, and things take longer than I think they do. So if we don't get a bullish breakout this week, it could be another couple of weeks or a month. And so I'm thinking I'm just going to go ahead and hold on to these shares. If I need to sell a call against these shares in order to hedge losses, I can do that. I don't want to do that, but I can. I will if a good downtrend is established. For the time being, I have cash. I'm going to use that cash to be day trading, buying puts if I need to in order to hedge any downside that may occur. So I think that I'm set up very well. I reduced my risk, I took profits, and I have exposure to the upside, and I have an escape plan for the downside. I have a complete trade. I think that I'm doing a good job here and just want to document that because it's hard to be disciplined. I wanted to hold all these calls because tomorrow the price could rise to like $14. It really could. And I mean, I'll be hurting if I sell all my calls. So I need to make sure I hold just a few, and I'm happy with those $13 calls. Moving on to AMC. This is the real show. Everyone wants to talk about about AMC. AMC had a big day today, pushing up and up and up and up and up, and just kind of kept surprising me. It moved higher right off the bat in the morning. There was this big like gap fill. These two candles, they didn't really scare me. In terms of forecasting, right here I said, well, it looks like AMC is going to go to 18. And it was like clunk, clunk, clunk. And I was like, whatever, it probably still is. And it did. I have been expecting a top to form here at around $18. And I've been kind of worried because yes, the price can move to $18, but am I bullish? No. And there's a reason for that. And that actually is because of the RSI. And before we start this discussion, it's important to know that the price always leads the indicator. The indicator does not lead the price. And if you get caught chasing indicators, you could lose on price action. What? Yeah, all indicators are based on the price. So the RSI is an average of the closing price on the EMAs that you see. And so this is what I see. I'm going to actually blow this up a little bit. And I spoke about this a couple of weeks ago. I said, okay, when we had this big push down, I think it was on this day here, this third day of the vertical rundown, I said, now the retracement bounce needs to happen quickly. If it takes longer than a week, that's not going to be good because the RSI could potentially form a bearish divergence. And look, that's what we're looking at. The price took an extra long time before trying to push up. These 4 days have a close within like 50 cents of each other. And if you're talking about averages, getting closes that close together anchors the RSI to wherever it was at. And here it was about at 50. And so now we do have this big push higher. But the RSI is currently right here at, what is this, 66? Or, 67. And the last peak we had in the RSI was at 69. The price is higher today than on the day we set that last high. So, the only thing we need to set bearish divergence in the RSI on AMC on the daily time frame is a red close. Or a close below today's close. That's really what it is. If we have a massive gap up, the price could drop and be red on the day, but then still close higher than yesterday, than today, and that would still raise the RSI because it's about the close. So not the color of the candle. So if tomorrow's close is below today's high, which is a significant level of support and resistance, then the RSI will flex down and we will have bearish divergence on the RSI. And then that's a risk. That's a risk. That's a lot of risk. So if I were holding out of the money calls on AMC or calls, I would have taken profits today. I did it on American Eagle Outfitters. I'm really bullish on American Eagle Outfitters. I want to see it go higher. It's set up to do great things. I think it's even more bullishly set up than AMC is. If you want AMC to explode because of its short interest, good luck. American Eagle Outfitters has just as much short interest, and guess what? That company is making money. So you tell me, AMC has earnings tomorrow. If they don't announce a profit, what do you think is going to happen? It's the same story over and over again. Anyway, I don't think that there's any logic in trying to be bullish in AMC when there's a better company with just as much short interest. Anyway, so here we go. That's not a popular thing to say, Cap. I don't care. Implied volatility did rise today. That's good, but it didn't come up higher than the last little peak. The volume was pretty good, coming above the 30-period average, but it's still in a downtrend. There are things to worry about here. This could be a massive double top, and the price could spill lower. Technically, the price is still moving through a corrective pattern, which is an ascending broadening wedge, and I kind of have that shown here. You could do two things here. You could draw an ascending broadening wedge, or you could draw an ascending triangle, and that ascending triangle has had a false breakout, and now the price is trying to break out again. That happened a couple of times. Let's see here. Where was that? Back here, where we had a couple of false breakouts. And I watched my November 26th video from 2021. You should watch it. It's interesting. I say that I'm bullish and that there's price targets above and below, and it's really could go any way. And I'd like to see this thing run higher, and my conviction tells me it will, but I have to see it first. And I feel the same way now. It's like, if you want to make some really bullish price targets on AMC, you can, but those targets have to be reached first, right? So you never know. We could see a rally up to $21. And that could lead to a test of this downtrend up here. And so this is kind of the biggest, best bullish move you could make is $23, $24 for AMC. And you could say, hey, we have earnings, and earnings are going to be good for some reason, and boom, the price will explode. You could say that, but that's so speculative. That's not even technical analysis. That's not even fundamental analysis. That's hopium. I'm calling it out. Doesn't mean it won't happen. It could happen, but honestly, I don't chase these things. I wait for them to rally up, and then I buy puts on the way down. It's like, that's been successful for me. So I would be concerned with bearish divergence forming on the RSI. It hasn't happened yet, of course. So tomorrow's a big signal day, and a big signal day on a day of earnings when earnings haven't been very good. I don't know. That's not great. So overall, I think that American Eagle Outfitters is looking really, really bullish. AMC could also run higher, but I wouldn't expect it. In fact, even though I'm bullish on American Eagle Outfitters, I reduced my risk. I managed my risk. That's what trading is about. Are you a trader or are you a gambler on the stock market? Because if you're a gambler on the stock market, then you should probably find a casino. There's faster ways to lose your money. Probably not. So there you go. That's how I'm feeling today. This is kind of a long video. It's going to take me a long time to process, so it might be up a little late, and I apologize for that. If you're not in the Discord, get in the Discord. If you like the analysis, if you want to support the channel, join CAPIVI ION. That's my premium subscription. Hit join below. I leave a link in the description as well. I provide a little more analysis in a private Discord channel, and mostly I've been covering my American Eagle Outfitters trading there and some other charts. I post I track a lot of charts in CAPIVI ION, and I have some charts pinned in that private Discord channel, and you can look at those charts. They age well. The idea is that this is big analysis. If you want to invest, if you're serious here, join CAPIVI ION because I'm doing analysis that is seriously good. Okay, I'm out of here. Happy trading.